Hot off the presses, the Bank of Canada leaves the overnight rate at 0.25%, even after the markets were expecting an increase in rates. Hey guys, what's up? It's your man Pete. And just thought I would update y'all on the Bank of Canada's latest announcement of holding interest rates and not raising them, and how this might affect the Toronto and GTA real estate market. I never thought the Bank of Canada not doing anything would have such a big impact on the market, but it really does. Because truthfully, from a real estate and housing perspective, we really needed an interest rate hike to kind of slow and temper the market just a little bit. Because houses are just absolutely stupid right now. It's insane and it's ridiculous, as we're about to finish up the first month of the year in 2022. And the thing is, for months now, buyers have been expecting a rate increase to happen. It's sort of been building up with all this news about crazy inflation, like prices going up on everyday items. We haven't seen inflation like this in like 3 decades, but it hasn't happened. What gives? What's going to happen to the Toronto and GTA market now after it's been hotter than ever in history? Try to answer that all-important question right after this. Okay, and we're back. So I think everybody in the financial markets and even in the real estate markets were expecting for months now a rate increase. Even yours truly, I was expecting at least a 25 basis point increase just to sort of slow down the market. But again, of course, I'm biased and I work in the real estate market, and I can really see the heavy action, frantic, desperate buying because of increased dollar value. Prices on everyday household items are going up $1 or $2. Home prices are going up by hundreds of thousands. And truthfully, one of the biggest reasons why the market's been so hot over the last 2 or 3 months, dating back to like November, December of 2021, and definitely here in January 2022, people were expecting a rate increase. So a lot of people were rushing into the markets because they just wanted to get in, lock their mortgage rates, lock down their property, and not have to pay the higher interest rate, which is typical. We see this all the time where people are rushing to get in before the market increases its rates. But in this case here, they didn't increase the rates because all you keep hearing in the media is the consumer price index, the basket of items that people need to pay for. Prices have gone up the most that they've ever gone up in about 3 decades. And so everyone's thinking, oh my God, definitely, there's gonna be a rate increase for sure to try to slow down this inflation. We couldn't be more wrong. But you see, in the housing market, when we're out there working with our buyers right now in January, we were literally seeing properties go up $100,000 or more every single week for the same damn house. So I see the real life panic and desperation that's happening in the markets, where if you don't get the property sooner, if you don't stretch and really go for a property and lock it down, you might end up paying more the next week. But really, the interest rates is probably second only to the amount of supply out there. So there isn't a lot of listings, there isn't a lot of inventory, and there's definitely an overabundance of demand and buyers for properties, and particularly for houses and townhouses. Basically, it's just a lot of buyers trying to get ahead of the market. They're trying to buy in before prices get more expensive throughout the year. But what the Bank of Canada reasoned was that they expected inflation to sort of recover slightly in the second half of the year. Like, the main reason why they're saying prices have gone up has been the supply constraints. Unless you've been living under a rock and not participating in modern economics at all, you would know that prices have gone up for certain things. Like, price for gas has gone up, price for food has gone up, for houses has definitely gone up. But what they're saying is that maybe these supply constraints right now are going to be fixed in the second half of the year, as maybe the pandemic will ease and maybe we'll sort of get back to normal in terms of the supply chain issues that we've been experiencing. And that's great news for the economy overall and for businesses overall, particularly small businesses, because they need to be able to borrow money. They need to be able to survive through this right now. And so the Bank of Canada and the policymakers are seeing this as a move to make sure that we can get out of this pandemic, get into recovery phase before they start changing interest rates. Because I know out there's still a lot of people who are struggling. There's definitely a lot of businesses that are struggling. And so I think it's a great move personally, but it's just that it's not really helping the housing market in any way or fashion, as prices go up literally, like I said, $100,000 a week. And then of course they really wanted to keep their promise of keeping interest rates low for at least 2 years, when they announced it 2 years ago, sort of when the pandemic struck. And so definitely the Bank of Canada doesn't want to be known as somebody who goes back on their word. And so through economic stimulus and favorable lending rates, we hope that this is going to help kickstart the economy again. And maybe we'll see some minor increases in the rates, possibly in March and then some other point in the year. So the hope is that in 6 months, maybe inflation will temper down just a little bit. But the housing market, I'm not really sure. It's gotten really ahead of itself, and nobody can really predict where the housing markets are going to go, especially for single freehold detached properties here in the GTA. They may be right about the short-term supply constraints right now, so maybe we'll do a video in 6 months' time to see if that's actually true. and how the lack of an interest rate increase has actually affected the Toronto real estate housing market. But from what I can tell you is that there is nothing normal about what's going on in the housing market. Just every year that I'm in this business, every year that I deal with my clients, I just see the intensity, the ferocity getting more and more frenzied every single year. Now, is this type of ferocity sustainable? I don't really know. Probably going to slow down just a little bit when there's more supply coming out in the spring market, which really just starts happening in the month of February. And if rates do go up slightly like they're indicating in the month of March, like I mentioned in my previous video, a small rate increase, 25 basis points, 50 basis points, it's not really going to do much to the market. I think the demand for property and housing is just it's stronger than rate increases right now. Buyers will still bid up properties. And again, as we've mentioned in many of our videos, supply is really the issue, and it's something that we're not going to be able to fix overnight. Okay, so what does this mean for the market as we start heading into the spring home buying market, which is sort of usually where all the heavy buying and selling action happens, particularly for low-rise housing? Well, what I think it means is that initial worry and fear that forced a lot of people to rush into the market and buy something before the rate increases happen, well, they have a bit more time now. They don't feel like they need to rush. They can wait a little bit longer and maybe wait for the supply to catch up to the demand, because literally right now we're seeing 30, 40 offers at houses. It's absolutely bonkers because they've been talking about it for months now. I think I heard it as early back as like October or November of 2021 that interest rate hikes were going to happen early in 2022. And so everybody was expecting it. Everybody thought it was going to happen. But now that it hasn't materialized, well, I think buyers are still going to continue to be out there, but maybe they're not going to be as intense and ferocious as they've been over the last couple of months, and especially in January. So that's good news for the housing market overall, I think. It's kind of like they threw a curveball at us sort of right at the end. It's like a full count. You're expecting a fastball to come right down the pipe, and you end up getting a curveball. Like, I'm not gonna lie, the entire market's gonna get psyched out by it. And the financial markets were actually building into their prices like 3 rate increases this year. So it just goes to show you that no matter how smart you are, you can't predict the future. You're not God. But again, I will reiterate that I think this psych out was actually a good thing for the economy overall. I think in the long term, it will benefit the greater economy, the greater Canadian economy, but it's not really doing anything to slow down the housing market, unfortunately. And so people will continue to be out there intensely buying properties and trying to outbid one another. My only hope is that it's just going to take a little bit of that edginess and that little bit of fear and desperation off the table, and people can still compete and bid and hopefully have a little bit more choice of going after properties instead of just going after whatever comes out tomorrow. Still, the main concern is the supply. How many homes will actually come up for sale in the next few months? How many excess buyers out there really when you're seeing 30 or 40 offers on one property? Usually the cure is more listings, more inventory, more people wanting to sell their houses because they're seeing the prices are awesome and amazing for them. And usually springtime, which starts around mid-February, is sort of where we start seeing more stuff coming out for sale. Specifically houses, condos, it's kind of any time of the year. But the issue with that is that the prices are now set for these neighborhoods. So there's a price comparable that's been set. And so anybody else selling homes in any particular neighborhood after that is probably not going to want to sell for any less. So will price records that are being set in January here in 2022 sustain itself throughout the rest of the year? And will we continue to see prices go up? Or was January the actual peak? We'll find out. We don't know. Only time will tell, and supply and listings will give us any sort of indication of how the rest of the year is going to play out. But I think the curveball was a really good strategic move that really makes the home buying consumer really think about what their next strategy should be. But still, you got to move quick. Still, you've got to make decisions quickly, and you've got to be aggressive to lock down a good house for yourself. But with rates staying where they are, it's really just adding more fuel to the fire as people, again, want to lock in their rates and lock in their property before the rate increase happens, potentially in March. So I hope you guys are all doing well. I hope you enjoyed this video. Please make sure you hit the subscribe button if you haven't already. Feel free to leave us a comment. Again, as always, if you need direct service, counsel, advice, or you need someone to guide you through this process of buying and selling or even renting some of your properties, then please don't hesitate to contact us here at Selling Toronto. We would be happy to help, and we definitely want to make sure we set you in really good positions, whether you're buying or selling, and we just know how to make our clients happy. So contact info is in the description below. It's also at the end of the video. See you guys in the next one. Really appreciate you for watching. Talk to you soon, and bye for now. And how that... What? No.